Hello and good morning everybody. Welcome to the Gold and Silver Club end of week review non-farm payroll special today, presented by myself, Phil Carr, and Nick Housey at the Gold and Silver Club. Right, today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. This live session will cover an end of week summary for gold, silver, oil and the commodity currencies. We'll be looking at the top trades of the week. We'll be covering live market commentary and technical analysis, and of course looking at the week ahead. So key events looking forward. We've certainly got a lot to cover today. Gold price this week has seen a little bit of a drop in volume as we're awaiting quite a lot of data out of the US today, and of course Independence Day yesterday. So we'll talk you through what we've seen this week in terms of price movement. So gold price is awaiting non-farm payroll data. Gold price slipped today to $1,235 an ounce as the dollar gained after the European Central Bank said it could cut interest rates even further. Gold has been trading very thin volumes this week as investors were reluctant to bolster positions ahead of US Independence Day holiday and Thursday, to also with the non-farm payroll report due out today. The European Central Bank left its key interest rates unchanged yesterday and said it would keep interest rates at record lows for an extended period and may cut them further, responding to turbulence caused by the Fed's exit plan. So gold posted its biggest quarterly loss, as discussed last week, on record in April to June after Ben Bernanke said last month the US economy was recovering strongly enough for the central bank to begin pulling back on its stimulus in the next few months and potentially end it by mid-2014. Indian consumption as well has fallen since the government imposed new import restrictions, whilst Chinese buyers are awaiting on sidelines for prices to fall further, or at least stabilise. So we could expect some strong buyers again if the price was to dip below 1,200 announced today, and the payroll data at 1:30 p.m. BST will give a better idea of when the Federal Reserve will begin tapering its $85 billion monthly bond buying stimulus program. So Chairman Ben Bernanke has said the scale back could begin in the next few months. So the market is certainly looking towards payroll for direction today. So I'm Phil Carr, a professional trader, trainer and speaker. I'm co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the most lucrative financial markets in the world, gold, silver, oil and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Housey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's successful traders, he discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications. And we both appeared frequently on financial television. This is us recently on Swiss television, giving our opinions on gold and silver and some of the recent global press publications we've been in as well. Okay, so we're going to move across to the gold price. We'll be going, having a look at the live markets and what is setting up this morning very shortly. So currently the gold price is 1,234 US dollars an ounce. So we'll be looking at some live analysis very shortly. So you can see overnight we've had quite a drop in gold price, about 150 pips or points since yesterday. So it's been quite a nice move, nice day trade so far. The top trades of the week using the Gold and Silver Club signature trading strategies. There have been quite a lot of activity this week to trade, lots of setups, so we'll run through that with you. First of all, last week, this is actually highlighted, we were looking at this on last week's technical analysis in the morning on FX Street. So this was Australian dollar, US dollar. You can see there we were coming up to an area of the upper resistance channel on this particular setup, and we also had a couple of what's known as a tweezer setup, two inverse hammers, and the price then broke through the 0.9232 level, automatically triggering a pending order, and we just saw throughout Friday the move down, a nice 100 pip move to hit our profit target of 0.9129 for 103 pips profit, so 50 pips risk on the trade, so each lot traded $1,000 of profit, $1,000 of risk for a reward of 103 pips, so for $1,030 profit for a 2-to-1 on Australian US dollar. Here we've got gold, so this is a move on gold that we saw to the downside, where we actually, this is an entry, we saw the downside move on Friday, we came all the way down, we tested a key level at 1180, which happened to be the October 2009 level of resistance as well. We saw a lot of buying at that particular level. We also found at that key level, we saw a lot of profit taking, end of quarter profit taking and end of the month profit taking, which caused a nice relief rally on Friday. So we had a nice entry at 12.13 once we saw a very clear strong setup on the candle, and we just came out there at 12.49 for a nice 360 points move there. So 100 point risks at each lot traded, $1,000 risk for 360 points of profits for 3,600 point profit for a 3-to-1 on gold just on Friday. WT oil, this was actually an entry earlier on just this week, so WT oil just going back to Monday this week, it's actually should say sell short there at the 101.79 level of resistance going back to December 2011. So this was a key resistance level. We actually rallied quite nicely during the week in WTI oil due to a lot of tension in the Middle East, but we did find resistance at that level, got tested twice, 101, the 102 level actually got tested twice, but we had a nice entry point at 101.79. You can see there where we just hit a 2-to-1 for 112 pips profit for a 50 pip risk there for a quick day trade. So each lot traded $500 risk for 112 pips profit, so $500 for 1,120 profit on each of those lots for a 2-to-1 on WTI oil. Gold, this was a highlight, the setup highlighted just yesterday. So you can see there yesterday to the left is where we actually had the setup at $1,249 an ounce. We've got a nice level of resistance just above there, 1,265. You've got some strong inverse hammers there, and we also, the overall downtrend is still within intact, so just we entered short that position just yesterday afternoon, and you can see this morning we've come out of that just for 150 points. So nice 2-to-1 on that trade. The risk was 70 points for 150 points, $700 risk for $1,500 profit for a quick 2-to-1 there just overnight on gold. And also silver, very much the same setup yesterday, bit of a tighter risk on this one, so we saw a level of resistance there around the 1975 level. Actually, we tested that several times, and the price just started to sell off quite nicely yesterday afternoon. So we entered 1975 in a retracement, and we've just come and hit our profit target this morning, 1908 for 67 pips for a nice 3-to-1 there, 21 pips risk, so $210 risk for $670 profit for a 3-to-1 on silver. Okay, so there's certainly plenty of activity to cover on today's markets. We've got non-farm payroll coming up very shortly in the next 2 hours and 20 minutes. So what I'll do, I'm going to go over to the live charts very shortly, and also we will be covering any questions you may have as well. So let me just bring that out. Okay, good. So the first chart which I wanted to show you is very important. This is the US dollar index, And what you can see on there is a massive gap just overnight there on the US dollar index. We had a huge gravestone doji, which is a very strong inverse hammer yesterday on the US dollar index. And you can see the market gapped all the way up to the 84 level on the open today. So that's very strong. You've got there almost it's a shooting star. And what I would be very mindful of today, although we've seen gold and silver sell off on this move quite strongly this morning, you do see a lot of these types of gaps get filled in terms of we could see a retracement all the way back to the 83 level on the US dollar index depending on the non-farm payroll data this afternoon. But where you do see such sharp gapping like this and then a shooting star, the volumes are really quite quiet at the moment on the US dollar index. I would be very mindful of this potential move this afternoon. Obviously we'll see what happens with the non-farm payroll data, but this has caused quite a sell-off in gold and silver today, and whether we've got much more downside, I would question that in terms of downside until the non-farm payroll numbers come out. So let's have a look at the charts, but do bear that in mind, the US dollar index, the move that we've seen. So first chart I want to cover is WTI oil. So here we've had that move on a lot of Middle East tensions this week. We rallied up to yearly highs actually, just up to 102.18 on this market. What I would note is that since then we've formed a doji yesterday, so the price opened and closed at exactly the same price. Got an inverse hammer there on the daily time frame. It's looking bearish to me at the moment, although very much this trade will be, it's counter trend what we're seeing at the moment. But I would be watching this very closely today and see whether we are going to get a further sell-off, whether this inverse hammer is going to be confirmed, or whether we're going to see yesterday's indecision confirmed to the downside. So if we're going to see the 100.67 level broken, we're going to see the price just come down there on WTI. The inverse to that would obviously be a breakout above today's high, and we'd be looking for the price to break above 101.54 to confirm the uptrend at the moment. So again, all eyes really on non-farm payroll. Similar situation on Brent crude oil. So Brent crude oil rallied up to a level of resistance. Actually, it's tested this level with pinpoint accuracy a couple of times now, 106.04. You can see we've just come up and retested that level today. Go into the 4-hour time frame. You can see there's more indecision on this market. So this market is to be decided by the non-farm payroll data that comes out. I note that we are coming up to the resistance level of May 2013, and so we are at a very clear resistance level, and this market is very clearly channeling sideways at the moment. So certainly going to be looking to see if there are any breakout opportunities this afternoon or sell short opportunities, because we are at an event area at the moment on Brent crude oil being at 106.04. So I'm certainly going to be watching this market very closely this afternoon too. Moving on to gold, so we've had quite a clear downward trend on gold, which was just a continuation really of that trend just yesterday. So for those of you who caught quick day trade, well done. That's moved quite nicely just overnight since yesterday. So you can see we came up and we retested this level of resistance. Initially this is the 1267 level, which is going back to a previous level of resistance in 2009, and if we just go a little bit more into detail on the candles this week, you can see $1,260 an ounce providing some resistance. You've got some indecision in the market there. You've got an inverse hammer, indecision in the market, and we saw a sell-off just overnight there after a lot of data came out from Europe yesterday, and the US dollar strengthened significantly. So in terms of what I've been looking at now at the moment, obviously all eyes on non-farm payroll data. So if the data coming out of America is very supportive, and we see the US dollar index rally further, I would expect gold to break down and come down to initially 1,225 level. That would be an important area of support. Breaking through that, there's not really much support until we get through probably initially to the 1200 level, and then I would expect a retest of 1180, but potentially some bargain hunters getting in if the price does break below 1200. So it's probably going to be quite quick volatility, I would expect, this afternoon if we get a breakdown in price, because prices below 1200 are seen as bargain prices currently on gold. On the inverse to that, if the data coming out of America on the non-farm payroll is negative for the US dollar, and we see a retracement from the US dollar index, I would expect a rally on gold, and I would expect the next levels of resistance to be 1267, retesting the weekly high, then 1276, and if we really do get a breakout beyond that, I would be looking at all the way up to the 1300 level, and beyond that 1321. So those would be the key levels to look at, but obviously at the moment where we stand is at 1,233 US dollars per ounce, so the closest levels are going to be 1,224 and 1,267 to the current price in terms of a breakout in either direction. Looking at silver, so silver, we had that similar setup. We're continuing within the downtrend there, coming down this morning, tested around 19.0, just have a look at the lows today, we tested around 19.03, so we've had quite, just a quick day trade on the silver market. If we do see US dollar index strength weaken actually this afternoon, I would expect the price to come down and a retest initially of the 1893 level, which is a key price action level, or see the price come down to retest the lows of 2013, which would be 1821. So I'll be looking at those key levels to see that would be back within the downward trending channel. Below that, if we did really start to see some strong movement to the downside, key numbers to be looking at below 1821. It could take us all the way down. It would require a rather big move, but a real key level of support for silver is going to be 1623 if the price was really to tank this afternoon. Now, if the price was to, if we were to see a rally on US dollar index weaken today, I would first of all expect resistance around the 1936 level, this whole consolidation zone. A breakout from that level, I would be looking at the 2075 as potential profit target areas if the market was to rally this afternoon and come just back within this resistance channel. So that's what I'll be certainly looking at on silver. So there is a lot to be looking at today, guys. There's a lot of key event areas the prices are at the moment, particularly gold, silver, crude oil and WTI oil. For Australian US dollar, we actually came to a rather significant Fibonacci level at the 0.9142 level. We have found support at that level. It's been choppy, but we are just seeing this market, it's reached lows again, 3-year lows just this week, but we are seeing a little bit of support at that level. Obviously this market awaiting data out of the US this afternoon. We are seeing a little bit of a relief rally today, capped by this key moving average, and we are just seeing this market obviously awaiting further data this afternoon. The market's still very much within a downtrend, staying within this resistance channel. So we've got a channel here, downward trending, a level of support and resistance. So I think any rallies here we could see capped at 0.92358 level, and any weakness on this market could actually lead to quite significant downward moves if we get breaks of this major level of support going back to a 3-year level of support. So I would be certainly looking to see whether we're going to hold that level of support or get a rally back to the 0.9235 level on Australian US dollar. USD Canadian dollar, it's been choppy this week, but it has found some, we've seen just very much a level of consolidation. I mean, you can draw just the consolidation zone which we've got very clearly on USD Canadian dollar at the moment. So we've certainly seen some support on this market as the US dollar index has rallied just overnight. We saw the prices back up to the 1.0538 level today. Again, this market is really, for me, going to be determined by non-farm payroll data this afternoon. So whether we're going to get a breakdown below 1.0448 level of support where the price has been consolidating but not really been able to close below that level, or whether we are going to get a close and a breakout of this resistance channel, which would really require a breakout of the 1.0578 level in order for this to be a breakout, sustained breakout, and see new 2013 highs on USD Canadian dollar. So I'll be looking at both of those key levels this afternoon on USD CAD. Moving across to New Zealand US dollar, so very much the same situation, this whole level of consolidation that we're seeing on New Zealand US dollar, so between the 0.7633 level and the 0.78733 level, we're just seeing the market chop between those. I mean, it's been like that for about 2 weeks now. A lot of indecision in this market. There have been day trades opportunities in between those levels, the daily volatility there about 140 pips between those levels of support and resistance. So again, I'll be interested to see if the market's going to break out above the 0.787 level this afternoon, or whether we're going to get a breakdown and we're going to get new 2013 lows if we were to break below 0.7673. Okay, so what we're going to do, we're going to just have a look at some of the questions that have come through, guys. So if you've got any other questions at all, do post them now before we go back to the main presentation. I'll have a look on these key charts. Okay, so Aslam Khan, so what about gold? Okay, so you're just asking just about gold again there, Aslam. So just a recap for some of you who have just joined the webinar a little bit late. So as we were saying, the market on gold is currently short term this week. We have been in a downtrend. Key levels we're looking at the moment, the price market is at $1,234 an ounce. First level to the downside there, I'll be looking at potential level of support is 1,225. A break through that level, there's really not a lot to stop this price getting down to 1,200 and below that 1180, but then I would be mindful that you might see some bargain hunting coming into the market at that level around the 1180. So I would expect just short and sharp moves this afternoon if we do get downside. If we do get moves to the downside on gold. On the inverse to that, if the data coming out of the US causes US dollar index weaken, I would expect a potential breakout, certainly towards the weekly high of 1267 and then 1276, and above that a retest of the 1300 level as well. So that's what I'd be looking at to the upside on this market. So you can see that we've had a nice day trade just overnight on a lot of weak data which came out for gold overnight, especially yesterday with the European news. But at the moment I would just be mindful. Price seems to be settling at 1235, so yeah, I'll just be very mindful now of the market is just going to be watching that key non-farm payroll data, so I wouldn't be entering into new positions at the moment. Be waiting now for 2 hours time for non-farm payroll. Okay, right, so we're just going to go to, so Edward just asking about GBP AUD. So what we're going to do, we're going to just focus, it's going to be pure focus on gold, silver, oil and the commodity currencies, but we will answer the question there looking at CAD. So just going back to USD CAD, yeah, key levels again here. USD Canadian dollar, we are just in a consolidation zone at the moment, just between 1.0578 and 1.0448. So I'd be very interested to see whether we're going to get a breakdown of that support level today or break out to the upside. We're still very much in that consolidation. Okay, fantastic. So with that, I think we've answered all your questions, guys. So what we're going to look at is the news for today and the week ahead as well. Okay, so key news looking forward. So the week ahead today, obviously the major news announcement today is US non-farm payroll, which will be at 1:30 p.m. BST. Non-farm payroll measured the change in the number of people employed during the previous month, excluding the farming industry. So job creation is certainly the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. So that's important because of the US dollar inverse correlation to gold. So that is going to be today's key news announcement. Also, at the same time, we have the US unemployment rate, and the unemployment rate measures the percentage of the total workforce that is unemployed and actively seeking employment during the previous month, which also significantly impacts the US dollar index. Later on this afternoon, for those of you who will be trading the USD Canadian dollar, we had the CAD IV PMI. That IV Purchasing Managers Index measures the activity level of purchasing managers in Canada. So a reading above 50 indicates expansion and a reading below 50 indicates contraction. A higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD, and that is also important because CAD is correlated to gold, inversely correlated. We have also next week, so moving into next week, we have the Chinese Yuan CPI. The Consumer Price Index measures the change in the price of goods and services from the perspective of the consumer. That's a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the Chinese yen, while a lower than expected reading should be taken as bearish for the Chinese yen. And that is important because China is of course a major buyer of gold and silver, so that will affect any swing trades or over the night positions you keep in gold and silver on Tuesday night. Next Wednesday, very important, we also have the FOMC statement in the evening, or FOMC, the minutes of the FOMC in the evening at 7 p.m. BST, and then 9:10 p.m. BST we have Fed Chairman Bernanke speaking. So important news announcement again for next Wednesday. Have that in your diary if you're going to be having any open positions during this announcement. As head of the Federal Reserve, which controls short-term interest rates, he has more influence over the US dollar's value than any other person, so traders closely watch his speeches as they are often used to drop hints regarding future monetary policy. His comments may determine a short-term positive or negative trend, so certainly he will be commenting on the figures which come out today on the non-farm payroll data. Thursday, the 11th of July, next week, 2:30 a.m. For those of you who trade the Australian US dollar, we have the AUD employment change. This measures the change in the number of people employed. Job creation is an important indicator of consumer spending. Higher than expected reading should be taken as bullish for the Australian dollar, while a lower than expected reading should be taken as bearish for the Australian dollar, and that is of course important because of the Australian dollar strong correlation with gold. Okay, fantastic. Well, as we're coming more or less spot on to 11:30, guys, we will start to wrap up. Now, of course, to request information on our gold, silver and commodity courses and our live trading room program, you can go to our website, which is www.jointhegoldensilverclub.com, or contact us at email office@thegoldensilverclub.com. You can also telephone us on 0207 193 0403 or 8521 8191 0403. We go step by step through non-farm payroll with our community. Again, for you, if you want to go to that link, it's www.jointhegoldensilverclub.com. Very simply, complete the form to request further information, and you can also make sure you subscribe to our newsletter at thegoldensilverclub.com to receive free weekly gold, silver, oil and commodity currency news, live market analysis and prices. Okay, great guys. So with that, good luck to all of you for certainly today's trading and the week ahead. If you've got any questions at all, do just feel free to drop us an email at the contact details displayed on the screen, and we will of course catch you at the same time again next week at 11 a.m. BST. Okay, fantastic. Take care guys. We'll see you on the next one. Bye bye.